Hey traders, in this video we're going to be looking at a very volatile name that's been trading based off of Twitter personality Zack Morris. You may have heard of him. DATS is the ticker. We had a short report released, and in my opinion I'm going to give some testimony as to why I believe that the people that released the short report were actually long. It's definitely speculation, but I'll show you the mindset. They're either really dumb or they just made a legend of a move as far as reverse psychology. Let's look at the charts. All right, so a little bit of a backdrop. We have Zack Morris here on Twitter, quickly gaining significant amounts of followers. I pretty much view it as Wall Street Bets and Reddit 2.0. There's a group of pumpers that have very volatile names that they jump into, and tons of people follow their trades, and there's tons of volatility. So full-time traders like myself, we follow along because I know that the plays that he's going to be talking about have significant volatility, and they have a lot of people who don't know anything about charts and trading in those names, and there's tons of emotions in both directions. I've traded their previous play, CEI, playing the bounces after the massive flushes and multiple halts on the way down. There were some significant gains on the bounces there. Just very high risk, high reward plays when looking for volatility. So love him or hate him, all I know is he brings opportunity, so I follow along. I don't listen to his targets. I don't listen to the direction that he's looking in. I just know that the chart that he's posting about will have volume and volatility for me to day trade. So most recently, DATS has been one of these names. Look at the volatility. We see multiple hundreds of percent to the upside. We see a 50% plus drop. We see 100% plus to the upside. We have a standard daily equilibrium, which we know is the most likely scenario when you get massive volatility. So the gap up for a daily lower high play was a beauty yesterday, bearish engulfing candle, and we dropped real hard. Today, I'm scouting at a bullish entry for a daily higher low. And I was playing it today on a nice 5-minute clear pattern, an equilibrium. So the backdrop is, I am scouting a daily higher low compared to the recent low that we just came from of 714 as the most likely scenario. We're in hourly oversold conditions. After you run 100% plus first hourly oversold conditions, you generally get a good bounce. And watch our YouTube video about back burner trades. That's a strategy that is talked about in that video. So I'm scouting a bullish entry for a daily higher low. And I'm trading it this morning. I see this solid 5-minute bounce from the low of the day. And I say, okay, that's a big enough bounce for me to scout a 5-minute higher low entry, looking for the bulls to confirm a 5-minute trend change to get the hourly oversold bounce going. So I make an entry at 978 on this consolidation. I place my stop under 951 with a little bit of wiggle room, and I try and let it play out. We then have a really nice 5-minute equilibrium, just like the daily equilibrium. We break bear, I stop out. And I'm sitting there staring at it. And someone in the chat room posts short report on DATS. As soon as I see someone say short report and I see the little follow through that the bears get to the downside, I'm looking to jump right back in bullish. Filled out my buy order, had it ready to go, 970 limit buy. We were trading in the 940s and 950s at that point in time. I got greedy. I went and changed the share count size and doubled it in my order window. About to place buy. Looking at the 15-second chart, this is definitely a tough one for me because I missed the move. I watched here, no follow through. This is 15 seconds for every candle. So this is 2 minutes. No follow through, no follow through, no follow through. Okay, doubling my position size, I'm ready to go. I place the buy order on this candle. I watch it run without me. I watch my order as the top bid for a few seconds, and it runs without me. And I missed out on a week maker in 5 minutes of trading because it then halted on the way up and it squeezed shorts with a massive move to the upside. As soon as there was no follow through to the downside on the short report, bulls ran with it. And if you watched CEI trade, CEI had a short report up at the highs and collapsed in response to it. Now, this is where I'm going to speculate. I don't know anything about Culpeper research, but I know two things. If you are releasing a short report, number one, they got their shares yesterday. They're not entering a position down here. They're in from yesterday and they're already well profitable if they are short. I have a theory that they may have been long here doing some reverse psychology. Why? They're either really dumb or they were playing reverse psychology because a daily higher low, anybody that trades markets knows the equilibrium is one of the most common patterns. And you look at this chart and you know a daily higher low compared to 714 is the most likely scenario. You're in hourly oversold conditions. You're down 45% from the high of the previous day. So they're either dumb and released the report at a very inopportune time. Again, the CEI report was up at the highs. This is very different after a 45% drop. So they either were trying to get the last little bit of downside to allow them to cover the short position that they entered yesterday, or their long put out a short report at a time where there is nobody left to short, and we're watching for the momentum shift back to the bulls and trigger a short squeeze because, again, there's nobody left to short. You know, if they are legends, and we'll probably never know, they release the support and they start market buying hand over fist. And I don't put that behind them in terms of that is a possibility. So just fun to speculate on, and nice psychology of this setup as far as the lack of follow through leading to a short squeeze. Just missed it. So, you know, a little bummed about that. I've had a good day otherwise, but that would have just made it a great day. And the takeaway for me, I can either be negative about it and mope, or I can say, well, I was right on point as far as what I was looking for. I was just 4 seconds too late. And that's the approach that I'm going to take. So I can congratulate myself to know that I was looking in the right direction, just missed on the execution. So for now, we're going to look for a daily equilibrium here. We're going to look for a higher low to form, which is likely already set now at 932. We're going to look for a daily lower high, anything under 1729. And we're going to see this daily range likely tighten up for another week plus. And then the break of this daily range, we're going to see volume drop off as it tightens. And then the break of this daily range is when we're going to see another spike in volume, volatility, and trading opportunity. So I know that end of October or early November, DATS is going to see more volatility when this daily tightening range breaks. Feel free to comment on your opinion as to what you think happened. Good luck trading.